In this video, I'm going to share with you how non-veterans can purchase VA REO properties using a VA loan. Many of you may have heard of or be familiar with VA home loans, but you may not be aware of VA's REO loans for veterans, non-veterans, and investors. I'm here to tell you all about it. VA loan for non-veterans. The VA Vendee Loan Program offers qualified buyers the option of purchasing a VA REO property with little to no money down. The program is available to veterans, non-veterans, owner-occupants, and investors. The VA Loan Program offers buyers of VA REO properties a unique seller financing loan product that is competitive and affordable. Remember, you must be a qualified buyer, so get pre-approved. You can only purchase VA REO properties with the Vendee loan. Veterans, non-veterans, owner-occupants, and investors are eligible to purchase. Who's eligible? VA Vendee loans are available for veterans, non-veterans, and investors who are purchasing eligible VA-owned properties. What is a VA REO property, you might ask? Well, when a veteran purchases a property using a VA home loan, VA guarantees the loan to protect the lender against losses. If the homeowner defaults on the loan, VA will repay the debt to the lender, and the property is resold by VA as a part of their REO inventory. Occupants. If the buyer is purchasing as an owner-occupant, then occupancy will be required for the Vendee loan. A borrower wishing to purchase a VA REO as a second or vacation home will be treated as an investor, and all investor guidelines will apply to the underwriting of the loan. Borrowers wishing to use a Housing Assistance Program or HAP should inform their loan officer during the loan process so the program can be evaluated in conjunction with the Vendee loan. As an owner-occupant, you can only have one active Vendee loan at a time. Remember, if you purchase as an owner-occupant, you must live in the property. You may use the loan to purchase a second property or vacation home, but you will be treated as an investor. Down payment assistance may be possible, so talk to your lender. Investors must have previous experience managing rental properties to offset the payment on the subject property. First-time investors are not eligible for Vendee loans. The Vendee program supports neighborhood stabilization. An investor should look to the program only for properties they wish to maintain as rentals. The Vendee program does not allow investors to purchase REO properties under this loan program as rehabilitation for the purpose of resale, so no fix and flip. Investors must be able to show some experience in managing rental properties or have properties that they are currently renting. Investors do not have a limit on the number of Vendee loans they can obtain, provided they continue to qualify and are in good standing on other Vendee loans. Remember, buying first-time investment properties are not allowed. You must have at least one property currently being rented. No fix and flip is allowed. Investors must be planning to purchase and rent properties purchased with the Vendee loan. Only 5% down payment is required, and there is no limit on the number of properties investors can purchase with a Vendee loan. The VA Guarantee Loan is a benefit to veterans. The Vendee loan is available to veterans and non-veterans equally. The guidelines and terms of the Vendee loan are different than the Guarantee Loan. Veteran purchasers should consider which loan program best suits their needs for the type of property they are trying to secure. If you're a veteran, understand that the Vendee loan is not a guarantee loan, which is only for veterans. So check to see which loan is best for you. You can finance 100% of your loan, but that does not include closing costs. Buyers will likely need to bring money to the closing table. 5% down payment is required by VA for investors. If the purchase price exceeds the value of the property, buyers may need to put more money down to qualify. Vendee is a fixed-rate loan program that is offered in both 15 and 30-year terms. The interest rate is typically below the prime and subprime rates. And generally speaking, an appraisal is not required.
However, an appraisal may be required in the event that the buyer is seeking to obtain financing higher than the value of the property. If an appraised value is less than the amount of the loan, the borrower will be required to reduce the loan amount not to exceed the value of their lending terms.
In mind, this is a 100% financed loan, but you will be required to pay closing costs. Loans have low interest rates and can be financed for either 15 or 30 years. Appraisals are not required unless the amount you are trying to finance is higher than the value of the property. The Vindy loan product is for purchase only and can only be used in conjunction with a VA REO property that is eligible for the program. As a part of the program, a buyer may have another person assume the responsibility of the loan. Assumability can be used in situations where the borrowers are not able to continue with the loan but are not selling the property. Second liens or mortgages are not allowed within the program. You cannot use the loan to refinance an existing loan, only to purchase a VA REO. Loans are assumable. Second liens and mortgages are not allowed. There are only two lending fees associated with the Vindy loan. The first is an origination fee. This fee is for the service to underwrite your loan. The second fee is called a funding fee. This fee is typically for all VA loans. The funding fee may be waived in circumstances where the borrower is a veteran or surviving dependent of a veteran that is receiving disability benefits. Vindy lending fees and closing costs are buyer's expenses. These may include, but are not limited to, title insurance, title search, title commitment, attorney's fees, escrow or settlement fees, wire fees, courier fees, the first 12-month premium of homeowner insurance, impounds or initial starting escrow amounts for taxes and homeowner insurance, HOA transfer or documentation costs, prorations, survey, home warranty, credit report, buyer validation or verification costs, flood or tax certificates, inspection costs, etc. Borrowers may finance their funding and origination fees, but may not finance any other closing costs or lending processing fees. There are two fees associated with the loan: an origination fee and a funding fee. Closing costs are the buyer's expense, and the funding and origination fees can be financed into the loan. The Vindy loan is for veterans, non-veterans, owner-occupants, and investors. It offers financing with little to no money down. Origination and funding fees may be rolled into the loan for qualified buyers. Has 15 or 30-year loan term options. Competitive interest rates. Seller may contribute towards closing costs. Has no appraisal requirement, no prepayment penalties, and no mortgage insurance requirements. I hope this information was enlightening. If so, please like, subscribe, and share this video with someone who might benefit from the information. Until next time, I'm Tara of Westchester Realty.